This is like our weekly date, Francisco. You know, we get together once a week, fail or not. Why today? Why the move? What can you tell us?
Hey, Tyler. Thanks for having me. Look, I think the market in natural gas is getting very nervous because, as you know, we have a global energy crisis going on. It's just that it hasn't impacted the U.S. yet. And what's been going on is there's been a big rally in the global price of thermal coal, which is essentially the basis of electricity generation for all our countries. And we've seen Appalachian coal prices in the U.S. rallying. So natural gas has been getting closer and closer to that Appalachian coal price rally, and that's been the main trend in the last few weeks. That's really been the main driver of gas. The rallying global power prices and global coal prices.
So as Europe tries to wean itself off of Russian natural gas, which it appears it is going to try to do, the pressure point then becomes on our ability, the United States or others, to send from terminals here and elsewhere around the world liquefied natural gas to Europe. But we just don't have enough terminals, and they take years to make, build, and get functioning. And then the question is, what is the return on investment of those terminals if in 25 years we're not looking at natural gas as the power source it is today?
That's right, Tyler. You framed it perfectly there. Not sure I have a lot to add, but I'll tell you one thing that worries me is that if the U.S. for whatever reason needs the gas domestically and needs to withhold those exports, we're going to have to see a very high domestic price in the U.S. natural gas market. Remember, globally, gas prices are $25, $30, $35, $40 per MMBTU, not 4, 5, 6, or 7.
Francisco, where do we go from here, both for oil and for nat gas? Do you expect these to be near-term price peaks?
I don't. I think the global energy markets are still extremely tight. We have very low inventories of oil, gas, coal. Inventories are low in North America and Europe and Asia. We have an energy crisis going on, and I think one of the big issues that is going to help provide some relief is if we have a major economic deceleration, also known as a recession. But of course, nobody wants that to happen. And the one saving grace so far has been the fact that China is in lockdown, and we have diesel prices scratching $200 a barrel with China in lockdown. And what's going to happen when China reopens? So I'm pretty concerned about the state of the energy markets. Hopefully, we'll see some supply responses. Hopefully, the producers in the U.S. and elsewhere will react to the high prices. But there is no imminent relief, I think, for consumers for the time being. Russia is just too big a producer to knock off the market.
Do I correctly infer from what you're saying that really the only or the best way these natural gas prices come down or diesel prices come down is if we do have a global economic recession?
Well, what I'm telling you is we don't really have the quantities to grow GDP at the pace we want. So it's no longer an issue of price. It's an issue of having the available quantities. Mm-hmm. And, of course, Europe is trying, as you pointed out, to sanction Russian energy, oil and gas, and it's already, as you probably know, sanctioned Russian coal exports. Right. Which is what's triggering the rally at the bottom of the stack. Remember, coal's typically the cheapest generation source around the world, so all those prices are trending higher. So hopefully we avoid the recession, but it's going to be quite a close call.